What is up, everybody? Give me just a moment here and we'll jump right into this video. Just want that green light. The last time I sort of talked when I tried this, my voice ended up getting cut off. All right, there we go. We're good to go. So I want to show you guys 4 trades for the day. It's July 8th, 2019, so Monday. As most of you know, July 3rd, we had an early close, but we traded near a record high at 3,000. We are no longer there. We are at around the 2970 level. Maybe not this evening, but when I was trading, this is where we were. Definitely well off the 3,000. I just find that interesting, and I wonder if we can pull back up to that point. So I just wanted to point that out. Anyways, I'm going to go over 4 trades here. We're going to go over this minus 25, the first trade of the day. I only traded for 45 minutes. I yielded $112.50 for the day. So we'll cover this minus 25, which was the only losing trade of the day. We'll cover this $50 trade, which was a horrible trade. Just the execution of it was terrible. And I just want to show you guys this because I still don't make the most best decisions at times. Sometimes I'm not on top of things like I should be, and this $50 trade is going to be a fantastic example of just sloppy trading. And we'll break that down, obviously. Then we're going to go over this break even above the 62.50, and then we'll go over the $62.50 trade, which was actually a really good trade. Just the way it was executed, you know. So let's go ahead and just jump into it. So we're trading near this low, as you can see on the profile. Look at this ask right here. Notice it says 192. Okay, you're about to see a lot of size come in here, and that sort of gives me the signal that maybe I should go short. And I took it. So right there, the price just ticked down, and all of a sudden the size pumped up, right? So let me show you that again and explain my thought processing behind this. So we're going to tick down, and it's going to, large size is just going to come up right here. So boom, and then it cranks up the 516 right there. So I see this immediately. Okay, and it's at 495 right now. I'm taking the mouse over there, getting ready to just go ahead and market order in for a short. Also, the reason I'm market ordering in for a short at this point is we've had some size sitting here. I'm not sure how long it's been here. I just turned on the computer where this chart starts, so I don't have the pre-recorded data before this, so I'm not sure how long this size has been here. However, that size that's sort of been propping the market up magically disappears right here. So I noticed that. I noticed this 494. So I'm like, all right, the sellers are going to be going for it at this point. Buyers are somewhat stepping out of the way. So I decided to go for a short. Now, the thing is, it's not going to work out. So notice all that size disappeared. No market orders really. Did any market orders trade into that? Let's see if any market orders traded into that real quick. I have yet to review the trading day, so I'm kind of doing that with you guys here. So it should click down here, and we should get, let's say fast forward it. I'm sorry, guys. So the entry was at 1223. Okay, it's coming up. So the entry is about to come up here. Guess I rewound it too far there. So 1223, it should be coming up right here. Go a little more forward so we can see that. Okay, there was my entry there. no volume, no volume, no market orders. There we go. So there's a size. It goes down immediately. We have size pumping in right there. So, you know, the size is pulled off. This is coming in. I'm like, all right, they're going to probably go for it. So I go ahead and market order in. I'm in. All of a sudden, that size is gone. So let's rewind it. So 185 traded in there, possibly. Let's see what happened here. So, oh, the 185 was there. So nothing traded into it. Not one contract trades into this 516, and it immediately pulls off. So that's not a good sign. When you see something like that, when you see a lot of size just magically appear and then disappear, depending on the context of the trade, that's generally not a good sign. I should have seen that. I did see that. You notice the mouse went up right there to sort of cover the trade here. Yeah, I'm not even on the right side of covering the trade. Well, actually, I am on the right side of covering the trade. So I'm covering the trade here for a potential one-tick loss. Red in, blue out. So, yeah, I noticed that's not there. And I'm not sure what to do. To me, it seems like maybe this was a spoof order. Maybe somebody temporarily faked the market out by putting in that large size and then canceling it off to get some orders in here and work the opposite side. So that was my thinking at this point. I'm like, was this a spoof? Was this fake? And then it just, you know, ticks up right here. So at this point, I'm like, ah, man, you know, I'm pretty sure that may have been a fake order, because all of a sudden, if you look at the heat map here, the size is back on. You'll see this 452 came in. So it did temporarily disappear. So at this point, you know, I feel like this was sort of a spoof, a fake out, and I think I fell for it. So I'm not feeling confident in this trade anymore. And let this play out. There we go. That was my key to get out. So what was the clue? The 76. So that means the market ticked up, and then 76 slammed the market back down. So I know the buying pressure is to the up, and it's just time to get out. So I ended up taking a 2-tick loss for $25 on that. It just wasn't worth being in anymore. So I'm going to go ahead and let this play out, because the next trade is the $50 trade, which happens in about a minute from that previous entry. So I should be getting back in here. Now it's came back down here. And I'm thinking, you know, maybe I'll go short again. So I exited the trade for a 2-tick loss. Now I'm getting back in. Because I'm still have somewhat of a short bias. As you can see on the heat map, the size is pulling off again. I mean, you still have the 409 there. So really the heat map doesn't start glowing until you're like in the 450s or something. But I still have this short bias at this point. Just because of how the order flow has been acting up to this point. So as you can see, I didn't get the fill there. The market immediately ticks down, and it only cleared out 79 contracts right here. So I want to show you something. So if this 150 right here, only 79 of that was real. So a lot of it canceled off. So what that means is the buyers are getting out of the way. So when you start trading in a particular direction and a bunch of orders start canceling off the bid, or possibly the ask if it's starting to trade up, and these orders are just canceling off and getting out of the way, that means that the market is more likely going to push that direction. So a bunch of market participants got it out of the way, and only 79 traded in there. So now I'm starting to think maybe this wasn't a spoof. Maybe that large size that came in was a signal. I've heard from other order flow traders that sometimes they'll flash large size randomly to signal other large traders to jump into a trade. Now, is that true? I don't know. I have no idea. But that's just something I heard, and I think it's kind of interesting. So now this is down to 379, and all of a sudden 119 came in. There was a block order of 109 that hit it. Now it's down to 257. So I'm not going to get the fill here. There's just no way. The market is trading away, and we're starting to hit such small volume node areas where this 514 and this 209 is. There's really not substantial size to prop the market up here. I mean, you do have the 473 down here, which obviously, if you look at the heat map, it's been coming on and off, and now it's more on. But the thing is, if it blasts through these levels, that 473 may get out of the way. We don't know. It could. We don't know how far down it could go. I mean, part of this scalping is just to play what the market gives you and how the momentum is going. You know, we don't know how far. Some of these numbers, some of these bids can pull out of the way last second. So I try to get in there. I was attempting the market order in right here, and I ended up I just got in way too late. It ended up putting me in the queue because the market ticked down before I could react and get a market order in right there. So I was a little slow there. This is a prime example of why speed is essential when making some of these decisions. So let me go back so you can just sort of see how my entry was horrible. But the thing is, I did want to get the fill here. Initially, I wanted to get the fill here at this 29.75.50 just so I could be positioned a little bit away from the breakout point. Ideally, if the market's going to break in a new high or low, ideally you want to sort of position yourself somewhere that's not on the ragged edge. And when I say the ragged edge, I mean where this 29.74.50 is. Really, you don't want to trade right at the edge of the new high and low because it could pull back on you. You want to, if you think it's going to go in a particular direction, you just try to position yourself as early as possible. But again, this is discretionary-based trading. Sometimes the order flow doesn't confirm it. And I'm not jumping in right now because we are still at this point, this 29.75 even, where a lot of size has been sitting. So I want to see how it trades into this 371 on the bid before I decide to make the decision to get back in. Now, as you can see, I have the mouse up here. I'm considering pushing a limit order in, but that's not going to happen. All of a sudden, we have this 121 and then 380. And I was way too slow. And here's another thing. When I was trading this session, my mental clarity wasn't as sharp as it usually is. There are some days where I'm just off. And a new subscriber, hey, welcome to the channel. Anyways, again, what was I talking about? Oh, yeah, my mental clarity. Some days I'm just not as sharp as I could be or as I need to be. And at this point in the trading session, I'm not as mentally clear as I needed to be. So my reaction was a little bit slow right there. Ideally, if you're going to go for this setup, let me show you how you should have entered it. So you got the 409. You know, ideally I want to get in the 2 ticks above it, but I don't get it. So when would you want? So I mean, I shouldn't even have the mouse up here at this point. You know, I was considering it, but this is where you would want to get in. As soon as you saw that go up to 119 and this goes to 257, I should have dropped the mouse down and immediately clicked in. And look, I'm over the box now. I have the opportunity to click in, but I didn't take it. And then I was a little too late. So I thought about it a fraction of a second too long. So hopefully you see that. This is a skill-based game, and you have to be quick. So I did think about it a little bit too long, and I lost the opportunity to get in there. So now I'm trying to work a fill right here to hopefully get in at this price. Essentially, I'm starting to chase a trade that I have no business chasing. And this is why I'm telling you that this trade was very sloppy. Again, this is the $50 trade. You're about to see how I profit on it. But so I decided to just pay up in market order at the very low. Ideally, I don't want to do that. But I decided, you know what, I'm going to give it a shot, see what happens here. So let me show you that entry again. So right there, I should have got in, but I was too slow to the party. And it happened so fast. Again, I'm still pretty quick, but not as quick as I should have been. So I'm thinking about getting the fill there. Boom, too slow. And then all of a sudden, I mean, it happened so quickly, I decided to pay up. And the reason I decided to pay up and market order down here instead of try to get this fill here is notice there's 283 market orders that came in, and this is down to 124. And we're also right on the low. So if it's going to go, it's probably going to go at this point. But that's not always true. It could very well pull back in. So now I'm canceling off orders so that way I don't accidentally get the fill. Now the market is coming back up against me. So now I'm 2 ticks out of the money here. And that was not good. I decided to scroll down on the DOM instead of covering my position. You shouldn't be scrolling around. You should be covering your position. So that's really sloppy. So watch how fast this goes. I'm not going to pause it here. So I'm thinking about getting in here. I'm like, you know, I'm kind of short biased at this point. I'm on the opposite side to cover my trade only in case I get the fill. Not working. I'm like, okay, well, I'm not going to get that fill. Should I try to get this fill? And then a little too slow, try to get in at the next level, which right there, that was sloppy, doing that whole moving the mouse around and stuff. I shouldn't have done that, and doing that, just moving the DOM around. You should be covering your trade. You shouldn't be repositioning the DOM. So that was very sloppy. And that can cost you money by doing little things like that. So now I'm trying to cover up my, you know, my ordinary 2-tick loss. Now it's against me 3 ticks. Not good. The ask is in my favor. It was, let me go back a little bit. But let's see here. There we go. So the ask is in my favor at 225. By 132. So it is still in my favor, but here's the thing. Here's my thinking at this point, okay? Sometimes, it really depends. Again, these things are never perfect. And really, when you order flow trade, every trade, I mean, even though you see some of the same things in the market over and over and over, it's really never the same thing. It's not like technical analysis where you trade off a wedge pattern or stochastic divergence, and you're always doing the same thing over and over on technical analysis, and you just stick to that plan. When it comes to order flow trading, everything, it's always very different. Every trade entry is, I mean, sometimes it's similar to another trade, but in the end, every trading day is different. The way the order flow reacts, it's always different. So, and the reason I'm telling you this is my thinking at this point is like, okay, well, this 29.75 even was initially a hardcore support zone. Well, I don't know if it was a hardcore support zone, but it was definitely a support zone that had size on it. So now that we're going through it, there are times where the market will pull back through just a little bit and then come back down. So that's my thinking. Is this just a pullback before we push? So that's sort of what I'm thinking at this point. And now the market's against me 3 ticks. Usually I don't like that to happen, but also this volume node is a lot larger at 10,368 compared to this 3,478. So I'm like, okay, well, maybe this larger volume node will act as resistance, and hopefully that'll help hold the market down enough time to at least see if this trade works out, or if not, allow me to bail out of the trade. And again, where the size was sitting at the 29.75 even, sometimes we'll break through it, come back, test it, or go through it just a little bit and come back down. So seeing that all the time, this is sort of why I'm holding on to the trade, but really I shouldn't be holding on to the trade. Really, I'm not happy with the way this trade entry went. And this is something I notice, and this is something that I want to fix and work on. You know, it's one thing to take a trade and get lucky, but it's another thing to be able to know what you're doing and to do it on a consistent basis and to perform well on a consistent basis. So I want to be a little more in tune with my trade management than I was on this particular trade, if that makes sense. I don't like how far it's gone against me. I don't like the way I was chasing it down. And to me, that's just a sloppy entry. And to hold on to a trade like this, to me, that's sort of sloppy. But I'm telling you what my thinking was at the time to help you sort of understand why I decided to hold on to this thing. But after analyzing it and seeing it and knowing what happened, I don't like the way I took the trade. I just don't like it, okay? So, you know, I'm like, all right, if I got to bail, I got to bail out right here. I cannot hold on to this trade any longer. So lucky for me, it comes back down. Notice there's only 70 right here, which is interesting. Let me see here. Is this where it goes back up? Yeah. So look, there's 132 here on the bid. And then just falls in at 70, which I think is interesting. So it's like a bunch of buyers ended up canceling their orders. And check that out, 39. Let's go back a little bit. Oh, well, it's 39 because I cleared the market orders. So, never mind. Well, let's see. How much was on that bid before I cleared out the market orders? Give me just a second. Okay, so there's 92 here after I cleared out. So 3 traded in here. 39. So around 60 orders canceled here. So this is a prime example of what I was telling you earlier. When you start to see bids cancel off a lot of orders when the market's trading into it, or the asks start to do this exact same thing you're seeing, that means the market is going to more than likely move in that direction. People are getting out of the way. People are stepping out of the way of the train or the falling knife or whatever you want to call it. So we just saw that at 2 levels where quite a few orders canceled off at these 2 levels, getting out of the way. Now, at the time, I didn't notice that. And it takes a trained eye to see stuff like that happen. And for some reason, my mouse is still up here covering this zone when theoretically it should be down here. Now watch this. So the market's obviously fighting right at this point. We got some ticking back and forth. So now it's to the point where I could theoretically break even. But I'm still holding it. I'm wanting to see, now at this point, I'm wanting to see what happens. So you can see I move the market. Now my price gets cleared out right here. Watch this. It gets cleared out. It does tick back up. But watch this. Boom. Fantastic execution for getting out of the trade. Now the market never comes back down here. All right. So that was $50 right there. That was this trade. I didn't like the entry. I didn't like how long I held on to it, but I ended up getting lucky. Okay? I don't want to get lucky. I want to take good trades and manage them very well. So I got lucky there. Now, I performed very well when it came to taking profits. So let me show you. So we're in the profits here. Let me show you the breakdown. And the way it's just sitting at this bottom here, the way the market is just trading down here for as long as it has, it traded down here, went back up. It didn't go that far back up. It came back down, and now we're just sitting at this level. And when I see that, and there's really no size down here, either there could be an iceberg order there, and it ends up reversing to the up, or if it just sits down here like this, and I'm not really seeing much absorption, so the iceberg theory kind of goes out the window. When I see it just sitting down here on the low like this, or a high and it's just trading there, usually you'll have a nice little push like you're about to see. Look at that. Those were a bunch of stop orders right there. If you notice, there's no block orders in the tape. It was a bunch of stop orders just clustered here. So that's what just happened. So why do I exit the trade? So I try to get that low here. It happened so fast that really I'm just now starting to react. And then I realize, I'm not going to get the low, so I just end up getting out here at the 29.73. And then it immediately goes up. Immediately goes up. So let's watch that entire trade from the entry to the exit. No, that's 25 minus 25. I don't want to cover that one. There it is. Let's watch this happen. So you can see it in real time. Like, okay, that's where I took the 2-tick loss. Now it's coming back down. I'm like, Now the thing is, some people would hold on and not take the 2-tick loss. But for me, it's, just get out of it and get back in. You really don't want to marry a trade. And I didn't realize it was going to fall back in. I thought it was going to continue to go up. And then seeing it come back down, I'm like, okay, well, I'll go for it again. So I try to get the fill here. I'm covering on the right side if I get in. Took a little too long to react. Try to get the next price. I'm like, you know what? Screw it. I'll just pay up and market order in here. Now we have a bit of a pullback, and then it comes back down. So here's the pullback forming. And we just trade a little bit past that initial resistance zone where the size originally was, and then we come back down. Now at this point, there's a crap load of stop orders sitting down here. I feel like somebody knows it. That's why they went for it. So I see it just sitting here like this, and the way it's sitting right now at this low, to me, I know that most of the time it's going to break. So the way it's just sitting there. Boom, there it goes. I have to react. I try to get that price. I don't get it. So I know, and that's it. So I did a fantastic job taking profits out of the market. The reason I decided to try to not wait at the ultimate, at the low, is it just tags 342 market orders here, and now the market's stalling. So I do try to get it, and then I come up to the next level, realizing, you know what, I may not get it, and I think it's time to get out. And it was a very good decision. So that was really quick decision making. Not an ideal entry, but a ideal exit. So that's sort of why I wanted to show you guys this trade. The moment you see that hesitation, depending on the context, most of the time when you see that hesitation, you take those profits. So see how it's not even down here. It's not even trying anymore. Now it's starting to just trade right here. And I'm like, you know what? I'm going to go for it and get out. I'm not even going to try to wait down here. And good thing I didn't, because essentially it comes back to almost where my entry is. Actually, I think it does come back on top of my entry. So I could have easily not taken 50, and that could have easily turned into a break-even trade if I didn't react quick enough to take those profits. Where did I get in at? Actually, let's see where I got in at. 74.50. I'll remember that. Yeah, it comes right back on my entry. So trying to work the queue for a one-tick win could be possible, but it could be very difficult. Yeah, that could have easily turned into a break-even trade if you were too slow on the profit taking there. So just look how fast it goes, and you have to react right here. It just hesitated so much, and it's stalling, and that's your sign to get the hell out of it. And just like when you saw the entry of me trying to get in, how I sort of chased the trade, trying to get in, essentially if I didn't get out here, I would have sort of done the same thing and tried to chase my exit. Sometimes that happens. It's one thing to chase an entry, but it's another thing if you're desperately trying to get out of a trade that's you're in profits and it's coming back on top of you. Trying to chase it to get back out sometimes happens. So I'll go forward some. So at this point, it doesn't even come back down here. Yes, it has another little bit of a push right here, but for the most part, where I took the profits right here at this level, it doesn't even come back down there again. And the market was horribly rejected. The reason being, I wish I could show you the full range of the volume profile. So let's go to the next trade because I know it's further up. Okay, so and don't worry about that trade. We'll show you that. Hold on real quick, y'all. Okay. So the way this volume profile is this is the fattest point of the entire day. Pretty textbook looking in the way it's formed. And then if you were to scroll up on the mouse, it would start to thin out like you see down here. Usually when you have a a trading day where the volume profile has this shape and the overall range the market traded in was somewhat tight, that means market participants are unsure of the overall direction of where the market's going to go. And I'm not talking about just during the day. I'm talking about overall where it's going to trade in the next few days or weeks or whatever. So usually when you have a day where the volume profile is textbook and you have one fair market value area, you don't have two of these lumpy profiles in the same day. When you just have one like this, hopefully you guys are following what I'm saying, that signifies market indecision. I may have to show you guys in some other videos in the future exactly what I'm trying to get at when I'm explaining this. But when you have a profile that looks just like this and the range is tight, because the high isn't much higher than what you're seeing now. It does go up a little bit, but it's not much higher than what you're seeing. So I think on the $62.50 trade, we'll see the top of this range when that video plays out. But this is the break-even trade. What's the entry time on it is 12:42. Yeah, so this is it. So let me rewind it. So my thinking in this is a 1 to 2 risk to reward trade. At this point, I'm just taking a small scalp. Obviously, you don't ever really want to take super small scalps. You want to get the most you can for the trade, but this one seemed like a for sure thing. Let me go back a little bit. Still in the entry. Okay. So at this point, check out how the chart has unfolded. This is where that $50 trade was, and we've pulled back up. And now we're pulling back into the point of control area, which is signified by the sand color. So this is the point of control area of the entire day. Now, if you watch my videos, you'll notice that I do point out multiple point of control areas, but there's going to be a very large one. And usually when you see the largest one of the day, there's a very high percentage chance that the price will pull into it. And on my depth of market, it changes colors to the sand color to signify the point of control for the entire trading session, the biggest point of control. So that would be the most volume. I'm sorry. Let me re-say what I'm trying to say here. The most volume traded during this session is right here at 2977.50. So 40,071 contracts. That is the most contracts traded during this entire session. Okay. And this session includes the European session and the Asian session. That's when my profiles reset at the end of the US session. They'll reset, and then this profile will build up during the Asian and European sessions. So the volume in here does include that as well. And this is where the most volume has been traded during all these sessions for this particular day. So I know that it's going to pull back into it. You can see we already traded into it once coming back up. So yes, we were here. So if you look earlier in the day, we traded up to the point of control. The point of control acted as a resistance zone, and we came back down. Okay, we never quite got back to there. Now we've come back up, and it's acted as a resistance zone again. Now, listen to what I'm saying very carefully, because the $62.50 trade is played off this point of control level. And as you can see, it's been acting as resistance twice now, here and here. So now we're pulling back up towards it. And I'm like, you know what? I can get a 2-tick scalp out of this somewhere in this zone because we're probably going to pull back into it. So I decide, I mean, obviously I'm not making the decision yet. So that price action where we just saw it go up, I'm like, you know what? I'm probably going to jump in on this. I mean, my mouse is just sitting there. There we go. Now it's working. So after seeing that price action, I'm like, you know what? I can take a 2-tick scalp off this. I'm going to go ahead and go for it because it's going to pull back into the point of control. I'm very sure of it. So I'm waiting in the queue to get filled at this point. Get the fill. Now the thing is, I'm a little concerned here. The reason I'm concerned is this: there's 306 sitting here with 393 here. And it's 306 versus 157. So I'm a little concerned about the size difference. And I noticed that. Now it pulled down the 280. That's good. 279. But the ask is still bigger than the bid. And I'm sitting here. You know, this trade's going on for a long time, in my opinion. And this large size is still sitting here, not pulling off. This bid's not pumping up. It's still large ask versus smaller bid. This is taking a very long time. Now it ticks back down. Now it's against me one tick. Now it came back up, and now it's 82 versus 347. So the ask is substantially larger than the bid. So I decide it's not even worth it, and I get out right on time, right as it goes down. And this is another prime example of why speed is very important when it comes to scalping. You have to get fast, and the only way you're going to get quick at this is to continue to practice. Overtrade. Now, don't overtrade on a live account. Make sure you have a good quality sim with a smart queue, and just practice. You have to be quick. So that was my thinking on why I wanted to get out of that trade. You know, I no longer had the confidence in the trade, and when you lose confidence, get out. And I mean, now it's starting to fall back in. So really, it was a really good decision to break even right there. So really, that was a fantastic trade. Even though it didn't yield anything, now it's pulling back up. But the order flow doesn't confirm anything for me to warrant staying in that trade. It just didn't look good. The order flow didn't look good at that time, so that's why I broke even. So let's go ahead and watch that again, just so you guys can see it without me pausing, because I just want you to see real time what what these things look like. What time does the trade start at? Break even is at what, 12:42? What is it on here? It's 12:42. Okay, so I'm going for it. I'm like, you know what? I can get a 2-tick scalp out of it. I'm gonna wait in the queue for this. Should pull back into the point of control. Got the large ask. The ask is still large. The ask is still large. The ask is still large. The ask is still large, but the bid's creeping up. But the ask is still large. Goes against me. Time to get out. Boom. Got out right when it falls in. And then I believe it falls in. Yep, there we go. It goes down another tick. So that price action was my signal to get out. And a lot of my break-even trades are based off of that sort of price action. Now, keep in mind the price action is the way the market moves, not the order flow. So let's watch it again. It already went against me. So watch how the market ticks down. Just that movement, and then goes back up. And then I decide to get out. And the reason I didn't immediately get back out when it came back up is because sometimes it'll tick down once and then come back and then continue up. I wanted to see the order flow at that point. So the price action sort of confirmed that it might be time to get out. And now I'm focusing on the order flow. And this ask is still larger than the bid. And that went down to 79. So that's just my signal. You know what? It's time to get out. It's 79. And it's really easy for the market to buy up 79 contracts relatively quickly in one go. So that's why I decided, to get out right there. Now now we're going to jump into the $62.50 trade, which I personally think it was the best trade as far as profitability goes, but it was just a good trade in general. So let's go ahead and jump into that. That one is at the entry was at 12.45. Here we go. So as you can see, we did eventually pull back into the point of control. But I wasn't willing to sit through some back and forth action. Now, here's the thing. When you have a large fair market value area with a point of control like this, and it's very large, the range is overall large, generally I'll go long where the profile tapers off and then trade and then exit out right before the point of control. And I'll do that on the short side as well. I'll play the edge of the profile and then usually get out at the point of control. But this particular fair market value area, this particular profile is way too large. They can either be way too tight, where it's trading within a 3-tick range, or they can be too large like this. You're looking for a specific size as far as it goes for these for volume profile trades to be a little more valid as far as playing the edge and taking profits on the point of control. That's a strategy I love to do, but again, the profile has to be a specific size, because if it's not, you're going to get a lot of this whipping around shit inside of it if it's too large, and that's exactly what's been happening in here. You could have got in here, but look at the way it just sort of, you could play the edge somewhere down here. I mean, initially it would have worked out on this first move, but then again, no, it wouldn't actually. So right when we start getting back up here, it does pull back down, and then it starts to work out. But it just whips around so much on these larger profiles that playing an edge and holding it to the point of control, for me, isn't worth sitting in this whipsaw action. So now we're at the point of control. So I'm considering, usually I don't like to take a trade at the point of control, but I decide I'm going to go for a long at this point. Why am I deciding to go for a long here? So a lot of my videos, you'll hear me say don't play the point of control. I think that's a little more true on smaller ranges, smaller volume profiles, smaller fair market value areas, I should say. This one's so large that this point of control is definitely acting as resistance. As you can see, we bounced off of it 1, 2, 3, 3 times, and now we're just now breaking through it. So now I'm treating this point of control level like a support and resistant level. I know that once we get on the other side of it, there's a high probability chance that it's going to continue up until it hits the part of the volume profile where the volume tapers off, such as this lower volume node at 2979.50. Then again, we do have this large size that's been sitting here for a good long time at 2979.75 with 553 contracts. That's been sitting there for a long time. So I know that once we get on the other side of this, there's a high probability we're gonna hit somewhere up here. Now, will it whip around? Yeah, it very well could, like it did down here, or it could go straight up. So the reason I'm entering right here is this is the main point of control. And generally, when you're at a good point of control level, whether it's the main one of the day or it's a smaller one somewhere else in the trading session, generally you're going to trade these 2 levels, and then it'll go above the point of control and trade the next level and trade back into the point of control, and then it'll go. So that's sort of price action I see happen all the time. And we've just traded into the 77.75 level. You can see 25 market orders came up there. So I realize at this point it's very well getting ready to transition to the other side of the point of control, and we in theory should be going up. There's a high probability. So what I'm trying to do is I'm trying to position myself I'm trying to get a really good position, and the best position for this particular play, since we're going long, is on the bottom side of the point of control. So that's exactly what I do by throwing out this order in the queue here. So I know that very well it could be trading back and forth right here. I decide it's not worth it. I'm going to just play the point of control. It goes against me 1 tick, but nothing trades down here, so that's good. Now the point of control is acting as support. Now the point of control is starting to become valid support. And again, here I go scrolling the damn DOM around while I'm in the trade. Don't do that. You shouldn't be doing that. So just doing that is sloppy. Now check this out. This is how I know we're off to the races at this point. You had 29 market orders come in right here. Nothing. No seller market orders are coming back in at this level. So that's a very good sign that this thing is going to go up. So here we go. Now this green is the VWAP, but I don't really care about VWAPs that much. I mean, really, I just have it on here just to have it on here, but the VWAP doesn't really matter to me that much. Sometimes you can take plays off of it, but for the most part, I really discount it. As you can see, I just set up 3 orders here to get out. I'm trying to work my way out by, I'm just trying to get a little further in the queue at each of these levels. Ideally, I want to get out at this 29.75.50. The reason I put these 3 orders here is because I'm running this large size where this 543 has been sitting for a very long time. So I know that it could trade up here, but will it? Well, we don't know. So the trade's in my favor, but it's starting to struggle here, and it is struggling on the VWAP. We get on the other side. Now I have this large size that just came in right here, this 479, to prop the market up. So buyers are definitely wanting to get the market to go up at this point. That's why they put in the large size. And if you watch my, which video? What is the name of the video? Give me just a moment. So it's literally the last video I made, which seems to be very popular, actually. What was the name? Oh, it was called Advanced Order Flow. So if you haven't seen the Advanced Order Flow trading video, you should watch that one, because you'll see this same sort of thing happen, where buyers are putting in large size to push the market up, but they do it at a breakout point. And that same thing's happening right here. Now it sort of goes away. So at this point, about 173 in the queue. It's 323 versus 226. Now the market just, what happened there, and what I'm doing is I'm ordering out at this point. The reason I did that, and of course the market just falls down right as I market order out. Why did I do that? Let me show you. Again, and look at this move on the chart. It's very overextended at this point. It's bound to fall back in. So what keyed me off into market ordering out? Let me go back a little bit more. Watch this 406 right here. And again, the market's stalling hardcore up here. It's really stalling at this point. So all this size just disappears here, and it falls to 132, and now this is 276. And that 410 went to, let me go back. So it's 406. I'm sorry, I said 410, didn't I? Watch this 406. Okay, so far it's looking good. It's looking like I might be able to get out of this price here. I'm working the queue, and you know, I put these orders out to sort of get a little bit further in the queue. It doesn't work all that well, but it kind of works. Like this one, I'm 285 out of 287. This one, I'm 326 out of 329. Doesn't always work that well, but I think it doesn't hurt to try to work yourself a little further in the queue at multiple levels at certain times. But again, watch this 406. That's what we're focusing on right here. So the market traded down, and then it immediately got pushed back up. So that 406 went to 489. So just like I've been telling you in a lot of my videos and a lot of trades, that's my clue to get out. So I decided to just market order out, and I market order out right on time. And it falls in. So fantastic execution for getting out. Overall, this is a really good trade. And really my mental clarity was lacking during this session, and I'm doing this video on the same day, so I'm still been a little bit off, and I'm still a little bit off right now. So I may not be articulating my words as well as I should. I just wanted to get this video out there for you guys so you could see this stuff. So I apologize for if I stutter or if I'm not speaking as clearly as I usually do or should. So I just not all there today for some reason. But let's watch this trade again. So actually, let's go over here because I do want to. Hopefully, it doesn't show the entire top of the volume profile range. So from this point up where this 2981 is, it starts to thin out like it does down here. So the bulk of the trading happened in here, right? Usually I like to fade the edges and take profits on the point of control, fade the edge, take profits at the point of control. And this is what I was trying to tell you guys a little bit earlier in the video. This particular fair market value area, it goes from about here at 29.75.25 up to somewhere around here. The profile is a little weird right here. It's not textbook. But it goes to about this area where this 563 is. And generally, I'd fade this area and then take profits at the point of control, and so on and so forth. And usually the price will start to tighten up on the point of control. But the thing is, this particular volume profile or fair market value area, which is in here, as you can see how I'm drawing the circle, it's too large. This range is too large for those plays to be more valid. Again, you don't want them to be too tight, or it's a 3-tick range, and you don't want them to be too large for those particular plays, which you didn't see in this video. I do have those plays in some other videos. I couldn't tell you which ones they are offhand. I believe they're in the plays with the early playlist of volume profile. I believe the second video or third video, I believe there's plays like that I'm trying to explain in those videos. I can't recall, but when I do record a play like that, I will let you guys know. So be on the lookout for that in the future. So I just want to throw that out there because, again, a lot of these trades they're not hard set rules. It's very discretionary based. So let's go ahead and watch this trade happen without pausing it, because I think it's a beautiful trade, fantastic trade. So where's my sign here? As soon as we trade on the other side of the point of control, that was my signal that the point of control is going to go from a resistance zone to a support zone. So what is it? What time does it start at? Okay, it's about to happen right here. So just be patient with me. There we go. Look, quite a bit of volume traded in the point of control right there. Quite a bit. 433 market orders. So I'm going to try to work this order here. I'm covering here to possibly market order in at the point of control if I can't get this. And I'm not getting the fill. Notice that I know I said I wouldn't pause it, but notice that the Q wasn't changing. So I get in at 146. A few orders come in, but no 134, but nothing else is coming in at this point. Nothing's coming in, and it goes back up. I'm like, you know what? I'll take the point of control level because it's still a safe level to play for an entry because the market should trade into the point of control for a while. So it makes it a great entry for this particular trade. Again, I don't usually like to play off the point of control, but seeing how this is a larger volume, I'm going to pause it here. Seeing how this is a larger volume profile, larger fair market value area, playing the point of control is a valid at this time. And just because we kept bouncing off of it, it's definitely a resistance zone. So now we're starting to see it turn into support. So that's why in this particular context, it is now valid to play the point of control, where usually I don't like to play it. So let's watch the entry, and I'm promise I won't pause it here. So I'm not getting the fill at this point. So I try to work the point of control here. I'm like, you know what? I'll just go for that. Hopefully I get it. Shouldn't be scrolling the damn thing around like I am. Don't do that. That's, even though this is a great trade, that's some sloppy shit right there. I think I was looking at something, but it really doesn't matter. I'm in a trade and I should be covering for a break even, which I'm not. Now I am. So that was very sloppy. Even though it's a fantastic entry and exit, just kind of doing that, the management was a little too sloppy, in my opinion. Seeing that 2 down here is real good. And look, we only had 29 come in here versus 326. That's real good. real good. Now I'm like really trying to work the Q here at 29.78. I considered deleting that order. Maybe it'll go into the next price above this 29.70.25, but I'm realizing it's struggling too much that I decided to just get out of it, which was a good call. So you can see I'm covering the order here. I'm considering canceling this particular order where I'm no longer waiting in the queue because I'm trying to see how the order flow is here. And if I just see market orders pumping in right here, I would cancel it and try to get out at the next level. And if I saw a lot of market orders coming at the next level, well, then I would cancel that and try to get out at the next level up here. But it started stalling, so that's why I didn't cancel the order initially. So watch the mouse covering it. I'm like, should I cancel it? But the order flow isn't confirming that I should cancel it because now we're stalled. And then I just saw all that tick back right there. I saw all those market orders come in, and then I saw the market orders come in here. I'm like, you know what? I just need to get out at this point. And I would have never got the fill at this 29.79 either. Where does it go from this point? So it chops around right here. So really, I think it was a good exit on it because you don't want to sit around in this chop. Let's watch the trade one more time, and then we'll call it. Try to get in right there to give myself a better position. And again, my signal was when it traded up here, right here, when we hit the 77.75 level. That was my signal that this is now becoming support. Again, sloppy trade management here, folks. Don't do that. You need to have the mouse covering your entry for a break even, and I'm not doing that. The mouse is not there, so I just want to point that out. And that's something I'm calling out on myself, so that way I'm being accountable for myself. You have to identify things like that. So right here, I'm thinking maybe this is it. Maybe it'll pull back in. And I feel like we're going to struggle right here at this, where this volume node gets lower. So I feel like 79 even could be the place to get out. And really the mouse should be up here covering. Now it is. It was down there. Really should be covering as the trades work their way up or down. And that order flow, that was just confirmation to get out right there. So that's that. That was that $62.50 trade. I hope you guys like this. I hope you guys are learning. I know you guys are learning. You tell me in the comments. So I just wanted to present this video. Wasn't there mentally for this trading session. I'm still not here mentally. I'm really tired. So tomorrow's a new day. So I think this has gone on long enough. So hopefully you guys enjoy that one, and we'll see you on the next one.